If you're looking to borrow £1 million to buy or remortgage a prime property in London, Surrey or across the UK, you might assume that you need to apply to a private bank. The good news is that this isn't necessarily the case, especially if your finances are relatively straightforward and you have a decent deposit. A £1 million mortgage can be arranged through high street banks and building societies as well as the private banks. Right now, lenders are competing intensely to attract wealthier clients, which has led to cheaper fixed and tracker rates and lower arrangement fees. When borrowing so much money, all of the lenders are going to look more closely at your income, your assets, your existing commitments, the property you want to buy, your deposit, and your overall financial position. And importantly, the question isn't simply, can I afford the monthly payment? The lender also needs to establish whether your income is sustainable, whether the loan represents an acceptable level of risk, and whether the property provides suitable security for the borrowing. In this video, we'll answer 5 key questions. First, should you use a high street lender or a private bank to buy your prime property? Second, is getting a £1 million mortgage difficult? Third, how many lenders offer mortgages of this size? Does it make sense to assess the large mortgage market or simply go with the offer from your bank? Fourth, what will the lender want to know about you? And finally, what can you do to put yourself in the strongest possible position before you apply? This video is for general information only and does not constitute mortgage or financial advice. Lending criteria varies between providers and individual circumstances. Always obtain personalised advice from an appropriately authorised mortgage advisor like Trinity Financial. This is particularly important if you are taking out larger mortgages, because if you choose a more expensive rate than necessary, you could end up paying a lot more in interest than you need to. High street mortgage lenders versus the private banks. Should you get your £1 million, £2 million or £3 million mortgage from a high street lender or a private bank? The answer is it depends on your circumstances. If your finances are relatively simple, you have a deposit of at least 15% of the purchase price, a good credit history and high income, then you are likely to want a high street lender as they tend to offer the most competitively priced rates. If you live overseas, you're buying an unusual property, for example a country estate or house with outbuildings and over 20 acres, you are paid in a foreign income, or you want a lender to manage your assets, a private bank may be the best option for you. At Trinity Financial, we use the specialist lending teams at banks like Barclays, Coutts, HSBC, Investec and Santander to arrange £1 million plus mortgages, but many other lenders also offer strong large loan deals. Surprisingly, Nationwide Building Society and Halifax consistently offer the cheapest mortgages between £1 million and £5 million. Many major banks and building societies have specialist high-value departments and work with high-end mortgage brokers. High street lender rates often significantly undercut the mortgages offered by the private banks, often by 0.75% or more, which means it makes sense to ensure you're getting the most competitively priced rate for your circumstances. In recent years, the balance in the large mortgage loan market has shifted from the private banks to the larger high street lenders. Even some smaller building societies now consistently issue £1 million plus mortgages, although mainly to those with more complex finances. So what are the benefits of using a high street mortgage lender? The potential advantages of a high street lender include competitive interest rates, straightforward mortgage products, and a relatively standardized application process. But there can also be limitations. A high street lender may place greater emphasis on standard affordability calculations. If you have a straightforward employed income, a large deposit and relatively few financial complications, they may work very well. Private banking is different. A private bank may be able to look at your finances more holistically. For example, your wealth may include investments, company interests, bonuses, trusts, property portfolios, or other assets. Some private banks also have greater flexibility around complex income structures and unusual circumstances for high net worth and ultra high net worth individuals. Coutts, for example, states that its private banking mortgage service can consider bespoke lending solutions and certain complex income arrangements, subject to underwriting approval. The bank recently brought in a minimum loan size of £1.5 million, which was designed to attract more high-end clients, often earning over £250,000 a year with assets and investments. So the key question isn't which type of lender is better. It's which lender is best suited to the way my finances are structured and offers the best rate. So, is it hard to get a £1 million plus mortgage? The short answer is it can be, but the size of the mortgage is only one part of the equation. The lender is primarily interested in whether the mortgage is affordable and represents an acceptable level of risk. For many standard mortgage applications, lenders look at income, expenditure, existing debts, employment, and credit history. Lenders typically calculate a loan-to-income ratio, with 4.5 times annual income being a common starting point, although some lenders can offer higher multiples to suitable borrowers of 6 times salary. Private banks also have high net worth exemptions. For illustration, if a lender were to use a 4.5 times income multiple, borrowing £1 million could imply an income of around £222,000 a year, but this is not a universal rule. Some lenders have higher income multiples for particular borrowers, and with a private bank or specialist high-value lender, the assessment may be more sophisticated than simply multiplying your salary by a fixed number. This could be up to a surprisingly large 6.5 times single or joint salary through HSBC for intermediaries, or up to 5.5 times salary through lenders like Barclays and Santander. Your assets, investment income, bonuses, business interests, and overall wealth may all be relevant when it comes to securing a sufficiently large mortgage to buy the property you want. Your deposit also matters. For example, borrowing £1 million against a £2 million property means a 50% loan-to-value ratio. Borrowing £1 million against a £1.25 million property means an 80% loan-to-value ratio. One of the private banks Trinity's brokers work with provides mortgages over £1 million to clients earning over £300,000 with a 10% deposit, although the bank often expects chunky lump sum overpayments, typically timed with any quarterly or annual bonuses received. So rather than asking, is £1 million too much? A better question is, does my income, wealth, deposit and property value support a £1 million loan? You may also be wondering whether there are actually many lenders prepared to offer mortgages of £1 million or more. The answer is yes. There are high street banks, building societies, private banks and specialist lenders operating at the higher end of the mortgage market. However, there is an important distinction. A lender may technically offer a mortgage of £1 million or more, but that doesn't mean every borrower can access that amount. Each lender has its own criteria. One lender may be comfortable with a particular level of borrowing at a certain loan to value. Another may place greater restrictions on the property. Another may have specific requirements around income, and another may be more comfortable with complex or self-employed income. This is why shopping around can become particularly important when you're dealing with a large mortgage. A decent mortgage advisor can potentially compare lenders and their criteria rather than simply approaching one bank and asking whether it will lend £1 million. Good advisors can consider mortgages from multiple providers, whereas an advisor working for a particular bank will generally be restricted to that bank's products. At the £1 million level, getting the application to the right lender can be just as important as having a strong financial position. Now let's get into the detail. What will a lender actually want to know before agreeing to lend you £1 million? The first area is your income. If you're employed, the lender may want to understand your basic salary, bonus, commission, and other income. If you're self-employed, they may want several years of accounts and tax information. They'll also look at your expenditure. That can include mortgages, loans, credit cards, childcare, school fees, insurance, household bills, and general living costs. Your existing debts are particularly important because they reduce the amount of income available to service the new mortgage. Your credit history will also be checked. A strong credit history doesn't guarantee approval, but adverse credit, missed payments, or excessive recent credit applications can create additional difficulties. Then there is your deposit. The lender will want evidence showing where the deposit has come from. This is particularly important for larger transactions. You may need to provide bank statements, investment statements, or documentation showing the source of your funds. You are likely to be asked to provide documents such as payslips, P60 CES, bank statements, proof of deposit, and, for self-employed applicants, accounts and tax returns among the information lenders commonly request. And finally, the lender will want to know about the property itself. because when a bank lends £1 million, the property is an important part of its security. Check your credit history when you start thinking about applying for a mortgage to make sure you don't have any credit blips. Missed payments or CCJs can cause big problems and may mean you can't get an affordable mortgage. You should also gather your latest payslips, bonus history, and, if you are self-employed, check that your accounts are up to date. £1 million mortgage criteria has become much more flexible, particularly for higher earners and borrowers with more complex incomes. At Trinity Financial, we're seeing lenders stretch income multiples for the right applicants, which can make a significant difference to how much someone can borrow. Lenders are also becoming better at taking bonuses, using commission and other forms of variable pay into account when assessing mortgage affordability. That's increasingly important because we've noticed that higher earners' incomes are becoming much more complex. For borrowers looking to keep their monthly payments down, there are also lenders offering par or full interest-only mortgages, subject to having a suitable repayment strategy. Flexibility is another important consideration with larger loans. We have access to large loan tracker mortgages with no early repayment charges, which can be useful for borrowers expecting to repay or refinance their mortgage early. They can also be good for anyone unsure how long they will keep their property, potentially because of a relocation, a job, or a separation from their partner. Some lenders also allow borrowers to make overpayments of up to 20% of the mortgage balance each year without an early repayment charge, which is particularly useful for people expecting large bonuses or lump sum payments. If you're looking for a £1 million mortgage, it's worth speaking to a broker who understands which lenders are most flexible on income, affordability, and repayment structure. So, high street or private bank? If your finances are straightforward, for example, you have a high and stable income, a substantial deposit, a strong credit history, and a conventional property, a high street lender may be perfectly capable of arranging a £1 million mortgage. And you may find that you don't need private banking at all. However, if your finances are more complex, you may benefit from looking at private banks and specialist high-value mortgage providers. This could apply if you are a business owner, entrepreneur, investor, partner in a professional firm, someone with substantial bonuses, or someone whose wealth is not reflected simply by their annual salary. The most important thing to remember is that £1 million is not a magic threshold. A lender isn't simply asking, does this person earn enough to borrow £1 million? It is looking at the whole picture: your income, your expenditure, your assets, your liabilities, your deposit, your credit history, your age and future circumstances, the property you're buying, and the overall level of risk. So is it possible to get a £1 million mortgage? Absolutely. Is it available from high street lenders? Yes. Do private banks offer an alternative? Yes, particularly where a borrower's circumstances are more complex. And is it difficult? It depends entirely on the strength and structure of your financial position. The key is not simply finding a lender willing to lend £1 million. It's finding the right lender, the right structure, and the right level of borrowing for your circumstances. Considering a £1 million mortgage, speak to an appropriately authorized mortgage advisor before making a decision. Call our mortgage experts or visit www.trinityfinancial.co.uk to book a consultation. The information in this video was correct at the time of publication, but it may change. It is intended for general information only and is not advice.